Good morning, good afternoon, good evening around the world. My name is Doug Brunke. I am the founder and CEO of Global Chamber. We're an organization with 605 chapters around the world that is focused in on creating the connections and facilitating deals through information, through personal connections, and building a trusted network that allows people to get information that they trust and meet people that they trust. And so thank you for joining us today in this Globinar. It's a webinars by Global Chamber are Globinars because we are in 195 countries. And so you never know who might be on the call. We typically at Global Chamber events asterisk the people that are members so that we know who they are. We know those people. And so we know that they're known and trusted. Jim Cook would be an example of a member who's joined us today. And so if you're interested in learning more about how the network works, please let me know. I'm easy to reach, doug@globalchamber.org. We're very fortunate today to have an outstanding speaker and a great partner who's brought that speaker to us. The Globinar is ESG Beyond Reporting, Turning Compliance into Strategic Advantage. Our speaker today is Nalin Kumar Chandna, and I'm very pleased at first to introduce Adel Alawadi. He is the co-founder of the corporate group. He's also executive director of Global Chamber in UAE. Adel, thank you so much for bringing this conversation to us. What opening remarks would you like to make?
Thank you, Doug. Good morning, good afternoon, good evening, wherever you are. It's a pleasure to be here, and we are proud as a corporate group to handle your chapter here in the UAE and work with the private and government in terms of networking globally with the different cities and different chapters that we have around the globe. We chose ESG because we saw the importance of ESG, especially in this region, as well as globally. As a corporate group, we are into advisory and business consulting and market entry to this region. And with that, we need to talk about topics such as sector-wise or specific subjects such as ESG, because many of these, whether entrepreneurs, startups, or corporates, they need to understand the importance and align with the government. So the government here is always focusing on areas such as environmental, social, and governance impact and doing business here. So we thought that it's important to highlight that. So as many of you know, the ESG stands for environmental, social, and governance. So it's a criteria was set for standards and companies to operate with that help investors and institutions to understand more about the business and especially when it comes to investment. It was a bit it evolved in 2004, where it in the United Nations report came up, and that's where it started. It was started like who cares wins, connecting financial markets with to a changing world. So it's a joint initiative between major financial institutions then. But then it explored further, and I think with the COVID, we saw a lot of companies highlighting on ESG performance and demonstrating better resilience, and that also with financial institutions and funds, they were looking at how to accelerate it. And then a lot of regulations came up, and maybe EU sustainable standards and few other ones. I think today our guest, the speaker, will be highlighting on focus on this area, as well as showing some policies, regulations in the GCC countries and wider in Asia. Also, he has got some success stories to talk about. We will take the question and answers at the end of this presentation, and I will be a bit interacting with him over the slides. So the floor is yours, Abed. Thank you.
Welcome, Nalin. We appreciate you joining us today, and thank you, Adele, for that great introduction. Nalin Kumar Chandna is the founder and managing partner at Leadership Solutions. He is leading this boutique management consulting and advisory firm operating across Oman, the UAE, and India. He himself is a chartered accountant and senior advisor with over 28 years of experience across multiple industries and borders, advising boards, shareholders, family businesses, and senior leadership teams. He has a presentation for about 30 minutes. He's encouraged interaction. And so if you have questions along the way, please raise your hand and we'll see if we can get to you during the presentation of about 30 minutes. And then please feel free to use the chat area to introduce yourself, to ask questions, and to interact with the audience for these 30 minutes and then the Q&A section. Nalin, thank you for your information that you'll be sharing today in advance, and we look forward to learning more. Please go ahead.
Thank you, Doug. Thank you for the wonderful introduction. And thank you to Global Chamber to kind of inviting me for this event today. I'm really glad and privileged and honor to be with all of you. I have a small presentation, which if you allow, Doug, I'll be sharing it now.
Thank you.
You need help, let us.
Yeah, 1 second.
Hi, good afternoon, sir.
Yes, sir.
Hi, good afternoon, sir. How are you?
Thank you for joining. We'll be joining the conversation here in a moment. Thank you for your comments. Please feel free to leave comments in the chat area and raise your hand if you'd like to ask questions during the presentation.
Are you able to see the screen?
We can, Nalin. It looks great.
Okay. So today's topic is ESG beyond reporting. Over the last few years, ESG has evolved rapidly, as we've seen. And today's topic, deliberately, we've kept it as ESG beyond reporting because reporting as such is not enough now. What we are seeing is that the regulatory authorities, investors, lenders, and even customers are looking to companies who are not just interested in narrative reports and glossy reports, but they're looking at much beyond that. And that's the reason we are kind of focusing on ESG beyond reporting, turning compliance into strategic advantage. And I hope that this would be a helpful session today. In terms of the agenda, why ESG has changed fundamentally. So what evolution has happened in the last few years is what we're going to talk about. What has been the regulatory landscape, talking about the GCC countries, a bit of the wider Middle East countries, and also taking an India example. So we'll talk about that. ESG also comes with a lot of greenwashing and weak governance risks. So we'll talk about that, what greenwashing is and what there have been some real life examples where we've seen that greenwashing has happened and large organizations have been taken to task by regulatory authorities. And then a practical roadmap for boards and management in terms of how gradually we can bring it as the regulatory landscape evolves. But apart from that, there's a lot of commitment that is required from organizations to kind of bring this into their day-to-day corporate lifestyle and work culture. So we'll talk about that as well. So what has happened basically is ESG has now moved from more voluntary and companies who are doing more from a reputational advantage, looking at more of a reputational advantage from voluntary disclosures, now it is becoming more regulated. So you have to kind of comply with the framework that the regulators, whether the stock exchanges, whether it's the central banks, or whether the stock market authorities are kind of coming out with. So those have now kind of getting evolved. As I said, it is moving from narrative driven to decision useful kind of things. So more from the glossy reports, people are looking at metrics, people are looking at how the ESG performance management should happen, what kind of KPIs should be set up to ensure that it is not just merely a cost and a compliance factor, but adds to the overall value to the company. And again, more from the marketing led, it is becoming board accountable. So more governance is coming in place. Companies are setting up ESG committees where there are these committees are reporting to the overall board of the company, and they're looking at specific initiatives, specific tasks that are mandated to the management or to the company itself to kind of become more ESG driven. One important thing that we have seen recently is the phenomena that the organizations are facing is ESG fatigue. And why ESG fatigue? Because some organizations are feeling overwhelmed because they're struggling. There are too many frameworks. There are the sustainability standard board is there. There's the GRI framework. There are other frameworks, and then there are regional metrics that are defined either by the stock markets or by the government authorities. So there are too many frameworks, so it gets kind of overwhelming. So there is lack of cohesion at the moment in terms of what we should adopt. Then the data quality is poor. So the companies are not having the right data available at the moment in terms of how to calculate the greenhouse gas emissions, or the policies that should be in place for the right governance are not there. Diversity plans, gender diversity plans, they are not ready, or there are no laid down charters or KPIs for the board members or for the committees to kind of analyze that data, even at the ground level, in terms of what kind of emissions are happening, how much water was consumed. So data is available or it is not available at all. Even if it is available, it is of poor quality. So that is one challenge that organizations are facing. Then there is no single department at the moment. There's no clear ownership. So some organizations are shuffling between HR should handle it, or compliance should handle it, or ultimately finance gets the dump of all the data and they are asked to kind of compile everything. So it's been seen more as a compliance thing, as just something that has to be done, and there is no clear ownership. So that is another challenge that we have seen with the
Nilan, if I
organization.
could interact with you on this subject, this reminds me also similar topic, CSR, corporate social responsibility. It was the
Correct.
same thing. It was limbo between departments of HR, marketing, or maybe with the CEO office or something like that. But and how
Correct.
differentiate the CSR with the ESG?
Yeah, so CSR is one aspect where we talk about the social giving back of the companies. I think CSR is a subject which is all ingrained within the ESG, because ESG is a larger subject where we talk about not only because CSR usually used to kind of more relate with the voluntary projects that the company is undertaking, donations happening, and that's what it is. But I think this is a larger subject which definitely entirely encompasses CSR in itself, but talks more about how companies can contribute to a better environment. It is more future oriented. It is aligned with the nation's vision, net zero goals, like, for example, Saudi 2030, Oman Vision 2040. So I think there are a lot of emphasis that is being placed by the government with respect to the national long term goals to achieve these, more from the perspective that the future generations get the benefit out of it. So yes, CSR is definitely an important subject. And even we have seen as a firm, we have been getting a lot of work working on the CSR strategy for the companies also. As part of their ESG awareness, we are doing a lot of work on CSR studies, their CSR policies, how the KPIs have to be set up, who would be accountable, and how they measure at the end of the year in terms of how the CSR functioned in the company. Good point, Mr. Adil. Yeah, and also at the moment, what has happened is that a lot of companies were seeing ESG just as a reporting tool, just as a checkbox that, okay, we've complied with, and it is just a report. So that's why that fatigue has been there and the organizations have been struggling. But now that is changing, and that's what we're going to see as we move forward. So when we reframe ESG, we are looking at things happening in terms of there are few tenets that we need to be conscious about. Risk management obviously is part of ESG. It covers risk like reputational risk, your climate risk, your supply chain logistics risk. So these are already covered. So I think when we reframe ESG and we bring these things into perspective, it doesn't become a burden anymore because it gets embedded into the strategy of the company. It helps with business resilience. So if you've got a good sustainability governance policy model, that will help you in other areas as well. If you've got good operational manuals, if you're having good safety policies in the company, if you've got the right HSC procedures in the company, that is all going to help you with business resilience as well. Capital access. Why? Because a lot of investors have started seeing companies who are strong on ESG in a better lens. So that is helping organizations to raise finance, get better access to capital. And obviously, in the long run, reputation and trust is very important for, especially for the large organizations, multinational organizations. And ESG helps going a long way in building that reputation and trust for the organization. If we look at the regulatory landscape, so UAE is one of the more mature markets in the GCC when we talk about the regulatory landscape. And ADX and DFM listed companies have got mandatory ESG reporting. And then there is ESG disclosures framework coming in for in-scope entities at ADGM. And then the climate law, federal climate law mandates a compulsory calculation of greenhouse gas emissions and their reporting. And then the penalties have become very explicit, and the government is enforcing it in a big way. So UAE is there. Oman, if we see Oman again from financial year 2024, they did start mandatory ESG reporting for all the listed entities, irrespective of size, irrespective of revenue, irrespective of profits. So far as they are listed on the Muscat Stock Exchange, there is mandatory ESG reporting from financial year 2024. And they have come out, the stock exchange has come out with structured ESG metrics. So there are 30 metrics that have been defined, and each company has to report on these 30 metrics split across the three pillars of E, S, and G. So they want all your power consumption, your water consumption, how much emissions you did, uh, how is your gender diversity at the senior level, junior level, board level, whether there are women at the board level, and how the committees are represented, then whether the safety policies are there, data security policies are there. So I think they've come out with very detailed metrics. And initial years, as we see in any rule that comes in, it takes a bit of time. But I think now with the second year running, we have seen with our clients, the year one situation has significantly improved, and now the platform is ready, and now they are doing a lot of enhancements to the good work that they had done in the first year. For the private limited companies also, the Ministry of Commerce and Industry is talking about coming out with the metrics. Though there is no statutory mandate yet, but I think there is a strong investor and lender pressure, and the government is looking at bringing in metrics for the private limited companies as well. Sorry, I've got a bad throat, so you'll have to bear with me.
So just to add from my side, I mean, one of the things also, you give few examples of the criteria, but I've seen such UAE, I think, and few other countries in the region, they have something like on the nationalization. So one of the key components of the social pillars is that to recruit, for example, in UAE, nationalization. And that there have been some of the programs like NAFIS that is currently added. So I think there is a bit of emphasis on some of the criteria in this region where they're
Yeah.
looking at more nationalization programs.
Yeah, that's true. That's happening in across the region. Saudization we've seen, Omanization we've seen, and Emiratization we're seeing as well. Yeah, so that's part of their national agenda. And I think that's also to bring as much as local population into the mainstream or for the overall development. So I think, yeah, that's a valid, very good, valid point. Looking at Kuwait, for example, Kuwait is actually a good example of a market in transition. So here, ESG reporting guide has been issued by Bursa Kuwait, the stock exchange. And mandatory ESG reporting is expected for premium market companies. So they've not yet implemented, but I think there is a strong thing going on that they're working on, and the first reporting requirements are expected to be mandated soon. So that's happening. So if you see that across the region, all the companies, all the countries are looking at bringing in these metrics, because everybody realizes that in the long run, I think this is important to be embedded into the financial strategy, in the corporate strategy, rather than just having a standalone reporting kind of a framework.
And correct me if I'm wrong. These characteristics and standards, they are not following specific standards, EU or something. They're trying the countries themselves, yeah, to benchmark and see what they can use best practices across and apply it in the local country. Simply, each country
Correct,
will
correct.
get it different.
Correct, correct. For example, Oman's 30 metrics are derived from GRI standards, and they are encouraging reporting on GRI. But again, so there's no mandate of following a certain standard yet. So it's the intention is to move towards best practices. Yeah, Arabia's approach is more market driven than rule driven again. So they've come out with disclosure guidelines. They have strong investor driven in expectations. And the Saudi Vision 2030 has embedded a lot of, as part of their various initiatives across the various dimensions of Vision 2030 document, they've embedded ESG across. So I think that is more from a market dependent perspective rather than bringing out any rules. But again, as I said, as the countries are evolving and they're seeing each other, a lot of things are happening now. Bahrain, Qatar, I would say they're still in the early stages, but Bahrain has already made for financial institutions, they've made mandatory ESG reporting. Again, these ESG reporting are though mandated, there is no clear check in terms of what the content should be, and there's no audit that is going from the stock exchange, or there are no questions asked at the moment. I think the countries are at the moment more interested in at least bringing that discipline of companies doing those reporting, and then eventually the locks are going to tighten. And for listed companies, other listed companies, they've got ESG guidance. Similarly, Qatar has got ESG guidance for listed companies. And then climate disclosures are expected to become mandatory for certain other sectors. Egypt, I would say, is outside of the GCC and within the wider Middle East area. Egypt is perhaps the most regulated in terms of the ESG kind of a scenario. So they've tied reporting to the stock exchange governance indices. They are trying to gradually converge toward ISSB and global standards. ESG is increasingly linked to capital market credibility. So Egypt is doing a lot as well on the ESG side. Another country we would see is Jordan. So Jordan again is quite mature from that perspective. Amman Stock Exchange is introducing climate-related disclosures. Again, they are aligned with IFRS, ISSB standards. And for larger companies, they're coming out of the phased implementation approach. And again, so they are heavily focused on climate risk governance and financial materiality. Another country
Very, very
yeah,
interesting. Just before you get back into India, just to share with the audience here that there were approximately I think 4 or 5 Arab countries
hmm,
hosted the COP, which is the UN Climate Change Conference that touches the ESG.
yeah,
Morocco was in 2001, Qatar was in 2012, Egypt was in 22, and UAE was in 23.
right, right, absolutely. Wonderful. Yeah, so India, I think India is a very interesting example for the Middle East. It's just nearby, and it's a much more mature market now. The stock exchange there has made mandatory business responsibility and sustainability reporting. So they have a reporting format as well. It has been made mandated for the top 1,000 listed companies by market capitalization, and the plan is to kind of gradually keep on enhancing the umbrella. It covers ESG performance, governance, and value chain impacts. It moves towards, and they are planning to move from the basic reporting that they started with to now getting into assurance. So I think that is going to come soon, and that would be another example that other countries in the region can follow. The BRSR report is quite comprehensive and very detailed. So I think that a maturity is coming in the Indian market. But what we see as a common regulatory direction, because a lot is happening, everybody is moving at its speed, some people are watching each other. But what we are seeing universally that is happening across the region is that the move is from voluntary to mandatory. So earlier, large companies were doing it on a voluntary basis to ensure that they showcase their good image to the organizations outside, to regulators outside. But now, with mandatory thing coming in, everybody has to do it. As I said, from narrative, it is moving to metrics. So rather than just talking about bragging about stories, you need to demonstrate that you're actually doing things. From a marketing tool, from glossy reports, it is moving to governance. So even the boards are being made accountable. And then beyond just a report, it is coming in with the financial stability lens, that how sustainable are your financials also when we talk about just an ESG report, what kind of financial metrics you are putting in to kind of demonstrate that ESG is there for real.
Just talking about the report as well, I've seen many softwares that are used for accounting purpose or for CRM or for any sort of organization or ERP systems. A lot of them, they have embedded ESG because we talked about the report, so it has to be driven in a way that, can abstract from the real data. So a lot of these softwares, so when we are as organizations, whether SME or large companies, we always have to look for these kind of elements and structure of ESG in their software so we can use it or take it very effectively.
Correct. And I mean, it is interesting to see now airlines, when you book a ticket, as soon as you receive your e-ticket, it tells you how much carbon emissions you're going to make when you make this travel. So I think this is now getting embedded into the software, as Mr. Adil said. So things are getting calculated, and it is not just a standalone software. So when you book a ticket, as soon as you make the payment, the ticket comes to you, you know how much carbon emission is going to happen. Hotels are doing the same. Even you see on the electricity bills also, some countries are doing that. When you get an electricity bill, you come to know that how much carbon emission you did by using that electricity. So I think, yeah, so the tools, the technology is very important, because that is what is needed to embed it into the overall corporate strategy. Another thing that is um, important to understand when we talk about ESG is greenwashing. Now, greenwashing, sometimes organizations get too aggressive to demonstrate a very clean image, good image to the outside world, but eventually at the back end, things are not aligned. So that's where we call it greenwashing, when the claims exceed evidence, when selective disclosures are used. Because there have been companies where recently they claim that they are compliant with all the ESG rules, but later on it came to notice by audits or investigation that either they were using child labor, for example, for manufacturing activity in Bangladesh or Vietnam, or they had inhuman surroundings for their labor, and the labor was not even allowed to go home for 15 days, and every 15 days they were allowed to go home for a day, and they were living in inhuman conditions, and the company was boasting about doing tall ESG claims. So I think those are things which have really come to light, and greenwashing is very big. And we'll talk about a couple of examples in the next slide. But yeah, this is very important, where claims exceed evidence. And one important thing when we do ESG reporting is not only just talk about good things that you're doing. If there are things which are not as expected, it has to be done. So it has to be a balanced report. None of the regulators ask you to talk about the good things you've done, that you've supported the nationalization, you've hired so many people, you've conducted training programs for employees, you have done so much for the society. But if because of your action some harm has happened, that also should come to light. So don't use selective disclosures. It has to be a balanced report. This is very important for organizations to understand. And this will happen when the governance is weak. When governance gets stronger, I think things will start falling in place. If you see, there are one very recent big example about Total Energies. So they had made some climate claims on their reports that they submitted, and the court ruled out that your climate claims are misleading, and they were ordered to remove all their statements, and legal penalties were imposed. So besides the penalties, the financial penalties, the kind of credibility shock that companies receive is immense. So I think this is very important that greenwashing is curbed, and what we report is right. Deutsche Bank DWS Investments had been fined recently for overstating the ESG credentials, and the regulator had scrutinized their financial products from an ESG standpoint, what they were claiming, and they were found that it was not compliant with what they are claiming. So regulators actually demand consistency, and they are coming up in a big way, finding people, finding organizations, and rigorously kind of auditing things. At the same time, there are a lot of best practices to see as well. ADIB has got a very structured ESG reporting. They've defined clear KPIs and targets so that it's measurable. At the end of the year, they can monitor what KPIs were achieved, what was not achieved, what the targets were, how the bank has fared. And there's the board oversight is evident in the board meetings. It is documented. So the minutes kind of evidence that the board has been repeatedly discussing about ESG and how the progress is. So I think this from the board's perspective, once the oversight is there, there's a lot of pressure on the management and the people down below to kind of ensure that what they're reporting is right. So this is one good example we recently saw. Again, this is a very different industry, a heavy industry, and it shows that even heavy industries can show good ESG transparency. So the kind of manufacturing process they're using and how they have embedded power saving measures, water saving measures into the entity. So they've kind of demonstrated. Their report also shows there are a lot of operational metrics which demonstrate that they're actually doing it not just for the sake of reporting, but bringing it as a culture, as a lifestyle for the company. Majdal Futem Group, another important name. So they've got KPIs integrated into this ESG integrated strategy. They're doing a lot of transparent performance reporting. Again, KPIs, metrics, board governance is very strong. So what we should have when we talk about governance first, what should be the minimum ESG governance that organizations should be looking at today? Definitely, as I said, board committee oversight should be there, and preferably an ESG committee, a separate ESG dedicated committee, so that it can, without getting distracted, it can look at the ESG specific metrics. An ESG charter should be there. The KPIs should be set up for the committee as well as for the management. There should definitely be whistleblower frameworks. Recently, I was at a client meeting, and the client mentioned that he is he feels that there is some stealing going on in the procurement department, and apparently everybody knows. So I'm so sorry about this. And apparently everybody, but nobody's kind of speaking up because the employees down below are scared that the manager will kind of take a retaliatory action against them. So then we actually did a whistleblower framework for them, and the whistleblower framework kind of immediately after implementing, in 2 months time, we got like three complaints the chairman directly received from the employees in the procurement department, that they've been asked to kind of do things in a particular way, ignore the technical credentials of certain vendors. So some vendors are being treated preferentially. So I think these are things that we have to bring in the governance mechanism. Whistleblower framework is one important thing that we have seen has worked very well in organizations. And then once you make clear accountability, so this is the minimum ESG governance that the organization should be having. We should treat ESG like finance. We should talk about data ownership. We should have people assigned who should be talking about the ESG data. They should be auditable data. The methodology should be consistent in terms of how you are calculating things, how the emissions are calculated, how records are kept for ESG related audits. And we should get ready towards assurance because that is coming, especially for larger organizations. ESG would be data would be audited like the financial statements audit. So it is coming. So we should.
Just maybe to echo what you said, in some of the countries in this region, there's something called ICV, so that's in countries value certification, and it's not an mandatory over companies, but especially when you're working with public tenders, it sometimes it has to be done, okay, submitted, and sometimes it's preferred, and it has a big weightage. Could be from 15 to 30% overall scoring when you're submitting for your public tenders. And that I in country value does have social and environmental questions and governance across. So ESG would be embedded in that certification. And there are approved bodies and vendors that they produce these ones for on behalf of the government for a testing. So a lot of these data and information, which was mentioned by Niren earlier, it's important to be recorded and it's important to filters because that ICD certificate will have certain points to receive it. And the more you receive, then the more scoring you'll get for those public tenders.
Correct. Correct. Absolutely. So companies who are starting now, I think what we need to look at over the next 1 year is the following. So first 90 days to start with, I think there are four things that they need to do. One is define the scope and boundaries, what they're planning to do in this immediate run, because the subject of ESG as such is very wide, very vast. We need to identify material ESG topics. When we start with, there might be 50 topics that we need to work on, but 50 again may get overwhelming. So we identified like 6 to 8 material topics, and these material topics we revisit every year, and then we add on. Some topics may not remain material next year because we've already taken action on that. We add another 4 topics next year. So that's how a statement of materiality is prepared, a matrix is prepared, and material topics are identified for each entity. So again, for material topics for an IT company would be different. For a hotel, it would be different. For an insurance company, it would be different. For a real estate company, it would be different. For a heavy industry, it would be different. So each company would have, based on their business nature of business, would have a different material ESG topic. So those have to be identified. Owners have to be assigned and controls have to be put in place. Power has to be given to those people to kind of act. And then whatever data is being generated, that all those claims that the company makes have to be justified with evidence with that data. This is the immediate plan that should be put in place by the companies. And then over the next 3 to 12 months, they need to embed ESG into strategy and capex. So when they have a budget discussion, when they have a financial performance discussion, when they have the payroll discussion with at the board or the NR committee level, they should embed ESG into strategy. They should have KPIs to monitor how their the targets are being met, what kind of performance has been there by the senior management, by the people assigned to kind of carry out that task. And then assurance we have to prepare because the audits are coming. So we need to have all the documentation properly filed, whether soft form, digital form, paper form, whatever, so that we are ready for assurance tomorrow. And Communication, very important. So whatever has to be communicated should be going to the right channel. And good and bad about the ESG performance has to be communicated to the right channels, to the board and to the outside world, to the bankers, in a proper way. We don't have to hide the bad things and just talk about the good things. So obviously, coming to the end, key takeaway is that good ESG has to be credible, not just for the sake of having, not just a checkbox, but credible. It should be material. It should cover all the material topics that the company is facing. It should be governed. It should be watched out for. It should be monitored over a period of time, and it has to be embedded into the strategy of the overall company, so that it is not a burden and not just a tick box compliance for the company. Thank you so much, and my sincere apologies. My throat is not too good today. I would have loved to give you more examples, but that's about it at the moment.
It worked out well. Adele, did you have any comments or things that we should be thinking about?
I mean, thank you very much, Ellen, for highlighting the ESG importance and specifically giving examples of the policies, regulations within the region here, as well as some of the benchmark and case studies. And I think it's an agenda of every government in this region, in the Gulf region, and they have embedded in their future vision strategy. There are compulsory in certain for certain companies, especially the ones that are listed at the stock exchange, but also on the procurement, I've highlighted on the ICV and country value certification requirement. That's where ESG is also embedded, and more regulations for these are coming. So I remember 5 years back it was only really applied to certain cities or to certain local governments, but then now it's all governmental ministries, different countries in the region, and it's going to cascade down with the more of a SME level, maybe. It comes. I've seen it also touching all companies and corporates when they come to taking loans from the banks and certain things. So the banks are specifically looking at a parameter and a criteria to highlight the ESG importance and so forth. So it's going to continue and continue. And the takeaway for today is how to have the basic data and reports accumulated so you could have it and respond to those for the businesses, whether it's government tenders or it's bank, financial institutions, investors you want to joint ventures that you want to make, partnerships, models that you're building. So you need to have those things.
Thank you very much. Nayland, any comments relative to what Adele shared? And one question I have as we take questions, please either unmute yourself or raise your hand for any questions. I don't see anything in the chat area. When you think about all the different countries that you talked about, does it make sense from a corporate perspective to start with one country that is ahead of the others, and then what you end up doing cascades to the others? Is that one way to approach it?
Yeah, I think what we've seen, if we talk about GCC, what we've seen in Oman is that they've taken a step where they have mandated all the listed companies, irrespective of size, because it's not just about the size which should be dictating ESG applicability. I can understand that there is additional burden on companies not doing well and they have to kind of do this, but eventually, if all the listed companies is the right way to start. Like we are seeing in Oman, the private companies are also coming into the picture. So I think that country I have seen has taken a lead. This is now the second year that 2025 financials would be reported. UAE, like ADGM, ADX, and DFM, they are requirements, but again, that is only for a certain revenue upwards. So it's not all the companies yet. though, and again, Saudi, as I said, it's still more market driven rather than rule driven. So Oman is a good example to start with. Their metrics are also quite comprehensive. They are mandating GRI standards to kind of do the reporting on. So I think that is one country. India again is a good example to follow if somebody is trying to kind of do that. A lot of publicly available information on BRSR reports are available for view. So I think that I would suggest is Oman and India could be two good examples to start with.
Okay, very good. How do those countries compare to other countries around the world? Are there, you know, countries that are leaders in this area, and who would you point to relative to that?
Yeah, pretty good. I think I would say that the quality of the reports that we have seen in the Middle East are quite good. Even in the UAE, I would say that a lot of companies which don't have a mandatory requirement, like for example the large real estate players, they've come out with very detailed sustainability report. Again, this is more from the company's overall commitment level as well, because there has to be an intent to do it. So we don't have to wait for the compliance to come in before we start doing it. So if we can bring in best practices now, why not? Which we have seen a lot of UAE real estate companies, other large trading entities in the UAE have come up with. So I think there are a lot of examples to kind of follow. And these are all examples which are world-class examples comparable to any Western world report, for example.
Fantastic. Thank you for sharing. We'll come back to the topic as we wait for any questions to come in. Adele, this is really the first of a series of conversations that we're planning and Globinars that we're planning through the corporate group and Global Chamber. Is there anything that you would like to share or your team would like to share about the next events that are planned?
Yes, we're targeting the month of February. We're going to announce the date next week. For this week, we're going to announce it. We'll have a kind of a family business talking about the governance part of it, talking about the sustainability, talking about foundation, succession planning, challenges, as well as kind of case studies where we have seen many companies, again, aligned with government visions and what government has done in terms of regulations and legislations supporting many of the family offices and family businesses in this region. So that's the next step that we have it for the month of February.
Very good. Thank you very much. Ghanim, thank you for your messages in the chat area regarding any questions. Is there anything that you would like to share relative to today's event or anything that's coming up? Thank you for your leadership with the corporate group and Global Chamber. Ghanim, are you there?
Hello.
Hello, how are you? Are you there? And anything that you would like to add to the upcoming schedule?
Yeah, no, you can hear me now?
Yeah.
Yeah, actually, thank you, Doug. Special thanks for you for sure, and for our many speakers, Mr. Adil and Nalin, for the insightful information, especially from Nalin. Really, thank you. And nothing to add, actually, just repeat what Mr. Adil said. We are targeting February, and it will be about family business, and it will be uh, a little insight about our upcoming events, not only webinars, as we have events in the region, especially in GCC area and in India.
Good. Was there something you wanted to add, Adele?
No, all well.
Okay, very good. In terms, and I think what we'll do, Nalin, is I'll come back to you now for a final comment. In terms of this presentation, thank you so much for your comments today, and I'll ask you for your final comment. As far as activities today with Global Chamber, this is the first of 6 events for Global Chamber. Following up in 1 hour, we have a conversation about Turkey and opportunities there. There's the Bosco conference, of which Global Chamber is a partner, as is our partner in Turkey. And so we're talking about that upcoming trade conference. And then in 2.5 hours, we have our monthly Global Chamber India conversation. And so we've put that information in the chat area. It's actually going to be combined today with our weekly real estate conversation. So the first 45 minutes or so will be mostly focused in on India and a variety of speakers. And then the final 45 minutes will be our global real estate conversation. And there'll be a merging of those two conversations. And then there are several other events coming up, including our monthly Women in Global Leadership conversation. Nalin, thank you again. What final comments do you have for us?
I think, first of all, I would like to thank Global Chamber for making me part of this first of the 6 series. I really enjoyed uh, having this session today. ESG is a subject which is very close to my heart, and we have done a lot of work on ESG in the recent last couple of years. We are really seeing the change that is happening, the acceptability that is increasing, and the boards that are getting more interested in bringing in ESG into the organization. So I think that is something which we're very excited about. And we also believe that Global Chamber can be a platform for us to collaborate on any kind of ESG possibilities in terms of whether it is education, whether it is talking to people. And I'll be very happy if we can increase the awareness around the subject through Global Chamber.
Beautiful. Thank you very much. Thank you, everyone, for attending today. We appreciate your interest. If you'd like to get a hold of the speaker today, please either directly connect to him in LinkedIn or please let us know, and we're happy to make the connection. Nalin, again, thank you. Thank you to the members. And those of you who are not yet members, please feel free to reach out to info@globalchamber.org or doug@globalchamber.org, and we'll be happy to help and understand how we can support you. Have a great rest of your day. Take care, all.
Thank you.
Thank you, Nalin. Great presentation. We appreciate you.
Thank you.
Thank you, Adele.
Thank you very much. See you.